Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap. A little late today because very wisely, as I was getting ready to hit the go live button, I slid my computer, unplugged it, and it completely shut down and restarted. So I'll give everyone a moment to get here. But if you're catching it later, you didn't miss out on anything those first 10 minutes. If you are just joining now, it was not even a technical difficulty, Jimbo. It was my own insolence. I just slid my computer, it unplugged, everything was up and running. It was 2:30, and well, the restart happened, and you just deal with it. So, good afternoon, everybody. It is May 10th. It is Friday. Based off of that, I guess probably a good thing that it's Friday. May 10th. Stocks really bounced back here today. Another really volatile day, dipping early, rallying up as this just continues to be a pretty good battle. But as we've really seen all week long, while volatility is there, we certainly are down on the week. The bulls, they're not done, right? They're coming in pretty regularly. No, Jimbo. And hello, Amy. Good to see you. You, sir, are not late. I am late. So I couldn't even tweet out, hey, it's not there because the computer's restarting. I'm just kind of sitting here twiddling my thumbs. But always, yeah, I mean, it was a really good day, as far as most things, we're doing something very similar to that, Jimbo. There's no doubt. Looking ahead just into next week on the earnings front, we have worked out of earnings season, as you guys know. There's still a few big names coming out, though, next week. You've got a Walmart, you've got NVIDIA, you've got Cisco and John Deere. So while not a lot of names, some of them are pretty big. So we'll be, of course, sure to stay on top of that as we get here into next week. But looking at the S&P 500, down early, really started to drift. It looked like, is it really gonna break that 50-day moving average today? Well, the bulls had other things in mind after a little bit of, I guess, contemplation over the course of about an hour and 15 minutes. We just started to chop up all throughout the rest of the day. As you can kind of see, once we kind of started up on the intraday, we just kind of stayed above that 9 EMA on that 15-minute time frame all day long, even closing above it after that last little bit of profit taking towards the end of the day. Actually had buyers say, nah, we'll take a small position going into the weekend. And hey, Tanner, good to see you, my friend. Welcome, as always. Hope you are doing well. When we look at this on an hourly chart, we were kind of looking at it yesterday. We were kind of looking at this bearish retracement. This is about where we were when we met yesterday. For the first time in a little while, and I think it's probably a little too soon to get super crazy, but for the first time in a little while, we were able to break resistance on that hourly time frame. We still got some stuff ahead of us, but that is kind of the first bullish move, technically, that we've really seen all week long on an hourly time frame. So looks like there's a little bit of course, as Jimbo said, it was really big pop off of the lows here today. And at the end of the day, another close above the 50-day moving average. It didn't look like that when the day began was maybe going to be the case, but that's why you hear me and the other coaches so often say a close is a close is a close. We've seen that before, and it was pretty crazy. It was some movement. Volatility still here in the market, but it's starting to look like, hey, maybe this is that pullback opportunity that we have been looking for. The only real downside, on deeper pullbacks or to 50-day moving averages and things like that, is there's now stuff to scare us, right? There's the falling 9. Always like it when I'm working with the 9. I don't like to work against it, but on a deeper pullback, I've got to deal with it one way or the other. We're below the 20. So I don't think that it's let's go crazy Monday morning or anything like that. But I do think today was a good start off of yesterday here. Or off of yesterday's movement here, closing at a higher high. We did put in a lower low, though, so not quite the textbook pullback that maybe we would like to see. Over in the Dow, very similar day. Of course, everything's going to look very similar to, big down, big strong rally closing up in the green or thereabouts, still below that 50-day moving average. This is definitely one that I think we got to keep an eye on going into the next couple of trading days. That 50, which kind of is lining up pretty nicely with that old resistance level, could be a level of resistance that could at least scare me, just from a technical point of view. So for the Dow, I really still need to see it kind of work back like we've kind of talked about throughout most of the week. If it's, pullbacks I'm looking for, it is more likely to be in discretionary and in technology and things like that versus those huge blue chip companies, but not exclusively. Microsoft looks pretty decent in my opinion. So just want to be careful looking at this going forward, just in case. That's the scariest resistance level in my opinion in the market right now, in all of the different indexes. Over in the NASDAQ, very similar to the S&P, upward movement off of that 50-day moving average. So again, we've got some overhead on deeper pullbacks. That's just part of the deal, right? And so we'll want to keep an eye as we work into those shorter term averages. Ideally, much like we kind of asked for and actually got in crude this week, ideally we kind of sit there and kind of, just kind of pinch in a little bit, let that moving average work back to us, and then show some upward movement for confirmation. Again, is that maybe asking a little too much? Yeah, I think it might be, but we can ask, right? It doesn't hurt to ask. Nice thing about the NASDAQ is while we do have these old highs to contend with, these are all-time highs. And so this is still an area from a pullback perspective that in my mind, at least, is the most intriguing from a broad market perspective. And then you have the rut, very eerily similar candle to yesterday's, except this one closes in the green instead of the red, right back down to those intraday lows from yesterday, breaking all of that support, all of those moving averages, but closing back above that. So still looking at the rut overall, as if the market's going to rally, I expect the rut's going to try as well. A break above these highs, I do think, is a pretty bullish signal, kind of in its own weird way, a confirmation of that 2-day breakout of 1600 or where thereabouts, wherever you actually had the number. Right now, I think if I'm looking pullback, there are probably more appealing areas than the Russell index. So holding out, and really a lot of things look very similar, but it was definitely moving to get there and actually closing here on the positive today. So a good step for the bulls, at least for the break, for the traders out there who are looking at this as retracement. And as you guys know, for the most part, that is where I count myself as well. So I think the way we developed going into the weekend is a good start. Let's see how we start next week. Of course, we need to get some sort of upward movement to start getting some confirmation. But there's lots of interesting things out there, as we'll see. We'll take a quick peek at some of the things I found for the watch list before we wrap up here today. But before we do that, really had a good bounce off of the support zone here on XLB, which leads to some interesting things. Of course, anytime something bounces off support, none of us should be terribly surprised. When we factor in the market was really running here today too, that was a likely outcome, right? At support yesterday, held support yesterday, upward movement here today. We are going to have to keep an eye on this old 56, and I think we need to be real mindful of what could be developing here. And operative word is could be. If we rally up a little bit more, or even if we stop and start breaking, start selling back down and then take out that support, this is going to look an awful lot like a head and shoulders. Now, again, it's going to have to do a little bit of movement and then come back down and break that support for that to occur. And right now support's holding, so I'm not even saying we should assume that that's even the most likely outcome. But if that is what we see, to me at least, that would look like a head and shoulders pattern. So any close below this support at this point in time, I'm going to be looking at pretty bearish. Right now, I've got no problem with buying off of this support zone, but surprise, surprise, there are other areas I prefer in the market from a pullback perspective overall. But regardless of what I want, support continues to hold. More evidence that this approximately 54 support zone is an important price point for traders to be looking at on the materials ETF. Over in energy, kind of got in on the action today. Again, we're kind of just in a little bit of a sideways. It's one of those, some folks are trusting the little intraday floor that's been building over the last week. We all know that this is a pretty reasonable amount of history at 65. Right now, we're just stuck in the middle. And I think you could start to argue, and the longer we're in this little range here, the more I think you can argue that we break to the upside, it's a clean buy signal. We break to the downside, it's a clean sell signal. Just have to wait one way or the other. Now, I still lean to the bearish side. If it breaks that support, that would be more intriguing to me personally, but that doesn't mean that's what it's going to do or anything like that. But I do think if we're thinking from a bullish point of view, getting back on the right side of that $65 mark, getting back working with that 9 exponential moving average as a support zone instead of a potential resistance catalyst is an important step. So we'll have to work into early next week at least to get some signals over there. We had some really great movement in the financial sector here today, looking very nice, actually putting in a higher high and a higher low versus yesterday's candle. So as we weren't able to do that on the S&P 500, we were able to do that here in the financial sector. My favorite one of the day was Aflac. They broke out and they just kept running. They just kept running and running and running. Really clean breakout for Aflac. And that was, obviously Aflac may be a little prettier, at least to my eyes, than some of the other companies in this sector, but really kind of goes to show that there still appears to be at least some strength within the financial sector. A little bit of upward movement next week because there's still room. I mean, we had a pretty good move off of that break on Aflac, but there's still lots of other candidates out there. If it moved too much for our tastes, little bit of upward movement getting us back on the right side of that 2750, on the right side of those short-term moving averages. Think you have to really like this area if you're liking this as a pullback opportunity. At least the financials are looking pretty interesting. Very nice movement here today. Really clean candle too. Not everything was able to do that. Everything kind of ran up off the intraday lows, but putting in that higher low and that higher high, I think that matters quite honestly. I think it does matter at least a little bit. Over in industrials, just holding out at that $75 mark again. The question really is, if we're pulling into something like industrials or the material sector that had deeper pullbacks, are you comfortable to deal with the extra challenges, right? Everything's, not everything, but a lot of things are going to have, short-term moving averages on top of them or things like that with a little bit of a deeper pullback. It wasn't super deep, but it was a little deeper certainly than we've been accustomed to this year. How does that work for you? How does that make you feel? For me, I'm just a giant wimp. I'll like this sector again back above that $77 mark. And I have really no objection. Again, much like the material sector, if this support zone does give out, that would probably be a bearish signal that there's more downward movement back into that $73 range. So I think this price point at approximately 75 for support is important. I'm a little hesitant at that resistance, but a big part of it is because I'm just generally kind of a conservative guy when it comes to trading, and there's other areas that I like better. It's not so much I dislike it, it's just can't have everything, right? I'm not going to go crazy on Monday. I know that much. And good afternoon, Ilka. Great to see you. Hope you're having a great trip. I saw Ilka shared a picture over on Twitter out there riding on a helicopter in Vegas. That had to be a good time. Looks like you're having fun, my friend. I hope that you are, and appreciate the dedication getting out of the helicopter to get to the market recap. That is dedication, my friend. So keep an eye on 77 wherever you find yourself. We just have a lot of history there. And I think it's wise to be looking at that 77 as a potential resistance catalyst, whether we're buyers or on the sidelines, or even if we're bears at this point in time. We just have so much evidence at 77, as you guys all know, on the industrials. So I think it's wise to respect that, whatever we are individually doing. Boy, we really had some movement over in the staples here today. Another really good candle, much like the financial, and arguably even better. This is, a really bullish candle, right? A very bullish move. We took out all of the averages. The one of the easier things is when that 9 is still on the 20. It's just easier in my mind, at least, to push back through when they're not falling and when they're actually still rising. Continues to be a very attractive area from from this pullback perspective, and it's also has a somewhat of a history, and I kind of agree, kind of disagree, but it is kind of viewed as a little bit more of a defensive area in the market. I think it's more of the middle. I wouldn't call it defensive personally, but then you're just arguing, right, to argue. Regardless, really nice movement here today, pushing us back up above that recent 57 breakout zone. So going into next week, probably should be some opportunities from a bullish perspective if we want to go over there. And again, well, we didn't see this a lot on the market. We're starting to see a theme on these ETFs, right, where we held support and rallied back up. So these support zones, this bounce that we saw from yesterday into today in materials, in industrials, now here in the staples, these support zones have been confirmed to be places where folks are willing to buy. So them giving out, now I'm going to start having a much better idea of if this is, I do believe it's pullback more likely than anything else. You guys know that. I've kind of been looking at it from that point of view all week long, but that doesn't mean I'm right. Now I've got some pretty clear support. If I start to see these support levels give out, that should be giving me a better indication that, there maybe is a little bit more selling in the market, because we're really starting to see it in quite a few different areas, right? And that's always an important thing. At least now I know where I should maybe turn from being, cautious looking at the pullback to, maybe I should starting to look at things at least a little bit more on the bearish side of things. Over in utilities, this is one of those things, and you just say it out loud. You guys, I don't know if you guys did it either, but you sitting at that big support level at that little doji candle yesterday. I don't really feel too bad about not liking the material sector yesterday, but on utilities being in the sideways range, it's really not my style to buy at the bottom of a trending of a sideways trend. It's just, like I say many times, I understand why people do it. It's just not really my style. But after a day like today, I'm wondering why it isn't. We had some great movement off of that support level. And this was an important day, I think, for utilities in particular, because they were right at that support. I think that's a pretty clear line at approximately 57. That gives out. There's not a lot of support till 55. And so that holding, at least for today, was important. It didn't have much room to go to the downside here today by any means, right? We were knocking on that door of 57 yesterday. I think we actually closed like 56.98, if I remember right. But a big solid day. Now we're still sideways within the trading range. There is room from where we currently are to resistance. There's no doubt about that. Overall, still sideways, but really good movement off of that support level here today, and that's awesome. I'm glad that you're having a good time, Ilka. That's great to hear. It looked like you guys were having fun. Yeah, you guys have to follow Ilka on Twitter. He's just hanging out with his family there in the helicopter, looking like it's having a real good time. So healthcare was the weird one today. It really started going downhill really quick. You can kind of see this long tail here. I'm not sure exactly what you're referring to there, Jimbo. There's a little delay where I see your question versus where you ask it. Why do they buy it at that support? Just because it's held up before. I mean, you hear me probably say it a lot. What's happening is probably going to continue to happen, right? That's always the way to kind of look at things. And so if support keeps holding, buyers are going to come off of that support. Just because I'm not one of them doesn't mean much of anything. And good afternoon to you, Patricia. Welcome out, everybody. Apologize for being a little bit late today. Everybody who joined me early, I already told this miserable story, but everything was set up on my computer. I just had to hit the go live button. I slid my computer over so I could just see the second screen so I could see the chat better, and it unplugged my computer and everything went down, everything went dark, so I had to restart it, and well, that got me running a little bit behind. So it wasn't even technical difficulties, which is what it usually is. It was just non-technical difficulties, which is even worse because at least I know that I'm not good with tech. Looking at this on the 15-minute chart, we really started dropping on healthcare today. I mean, it was really moving. quite quickly, and it looked like it was going to be one of those days for healthcare. But rallying back up with the market, still in a really weird place. This chart is the weirdest one. Now we have this huge doji after reclaiming all of that breakdown, all of those weekly moving averages last week. Now we've failed them. And so now we're back below them with a huge low down here. This is still an area, in my opinion, to be very cautious on, regardless of what you're working with. Clean breakouts is what and breakdowns are about the only things I could be interested in this sector as we work into next week. So yeah, and exactly, Jimbo. So to kind of answer your question, let's come back over to the XLU charts. Let me just think about it from the perspective of the buyer, right? Okay, well, yesterday we're at 57. So if we're thinking about this from the perspective of the buyer, and forget about what the ticker symbol is, right? That we're talking pattern here. Well, basically, the thought process is something along the lines of this. I'm going to get build this up here. So this has been trading pretty consistently between 57 and approximately 59, right? Somewhere between 58.50 and 59. So the buyers, are basically saying, well, if this holds, we're moving from support here, 57, back to resistance, right? In hindsight, we should have done the same thing back here, right? Buy it at support, work our way back to resistance. And the logic, at least in my mind, is pretty sound. Okay, well, if I buy it at this floor of 57, if it stays in the sideways pattern, we work back up to $59, make a couple dollars a share. If this is the time it gives out, because it might, I know that I need to jump out when it breaks that support level, because there's going to be traders out there who are looking at that as a pretty bearish signal, right? So from a risk to reward perspective, it ends up being a pretty good option, right? Here, if using just yesterday's candle, our stop loss a little bit below that low is kind of the confirmation of downward movement. So we were risking or getting somewhere in the ballpark of, it looks like, about a 3-to-1 risk to reward ratio, betting on that support level holding up. And so the risk to reward is very appealing based off of the pattern's history. Well, again, if it bounces off support, none of us are surprised it bounced off of support, right? At least we shouldn't be. Support is support for a reason. So seeing that movement, when traders look at that, say, okay, well, put my stop a little bit below that level. If it stays in this range, I've got a pretty good risk to reward. So that's kind of the thought process around trading in a sideways range like this. Generally, I don't prefer to trade that way, though. I generally like to trade kind of into momentum. I guess my mental hangup, if you will, is I feel a lot better buying into strength than buying into weakness. Even though I recognize that support's there, I respect that support. I respect traders who trade that way. I've got no objection to it. I always like to trade when I have momentum, and to get from this resistance to the support, I had to have bearish momentum. So I have a hard time wanting to buy at that support level. Again, I have no objection. It is, in my opinion, a perfectly legitimate way to try to trade. There's no doubt about that in my mind, Jimbo. But again, it's preferences. You like what you like. You don't like what you don't like, right? Trading's not much different than everything in life. I like football. I don't like baseball. So I like video games more than I like board games. And so we all just kind of like what we like. Kind of coming back into our sectors. Again, it's tough right now with the healthcare sector. I think we have to be very cautious. It doesn't seem like it has any clue what it wants to do with itself. And until it does, like I said, clean breaks to the upside or the downside, I could be interested in, but that's about the only thing that could be intriguing to me in that sector going into next week. Looking at the discretionary, much like everything else, bouncing off of those lows, nice bounce off of that 50-day moving average. Again, another area that I do really like from a pullback perspective. I'll like it a little bit more, kind of like the financials, once we kind of reclaim that resistance break at 118 in the case of the discretionary sector, but do really like this as a pullback area overall. Saw some nice movement here today. So this is still, in an upward trend and not, threatening to break support, right? Much like some, the communication services or the tech sector. So an area that I probably am going to lean a little bit more towards from a pullback perspective going into next week. Good day over in REITs and closing right back at that old area. You know, you either barely broke it or barely didn't, depending on your rules. Still think it's neutral. Still think we're overall looking at this from a neutral perspective between this 34.75 and this 36.50 or 60 range. You could make a case, I think, that if we show a little more upward movement, we've made higher lows, and that's a little bit of a shift into the bullish momentum. The problem is we have those highs from a couple of weeks ago. They're not huge, but they're there. We've got the all-time high to contend with. So for me, individual REITs, there might be a couple out that are actually interesting. Who was it? Was it Cube that I found here today? They were one of the REITs. A nice clean break out on Cube, so they had some room to run. My favorite REIT is Prologis personally. They're in a kind of a pullback range, so there is some room, but we've got a couple of levels of resistance on the overall sector. So I'm going to be careful, but I could be tempted on a chart that looks like PLD, but there's so many retracements out there, I'm probably not going to be choosing a REIT for better or worse if I do trade into the retracement. And you're very welcome, Jimbo. And lastly, over communication services, how did we miss tech? Well, that's not cool. We got going. There we go. Let's go back to tech first. Holding up at that 50, we did breach it on the intraday, much like we did yesterday, but kind of worked our way through here. Again, if we can reclaim this high, I don't expect these old highs to be tremendous levels of resistance on these ETFs, but I don't want to be surprised if they are. And so that's why I would like to see them be reclaimed, get back on the right side of them, showing me a little more momentum and a little bit of strength. Because again, they're there. I don't know that they're a huge deal, but I'd rather they weren't there at the same time, right? And so I'm probably not alone. But another area sitting on that, approximately at that 50-day moving average, again, only real downside is, from a pullback perspective, is we're going to have some short-term stuff that we have to work our way through if we're trading into the retracement, from a broad market perspective. There we go. Now we'll get into communication services. And very similar to the tech side of things, actually, Facebook actually has an interesting look to them, kind of sitting right in this bullish zone between what's still between the 9 and the 20, kind of holding up here today. I think there's probably prettier pullbacks, but I don't think it's a terrible looking pullback either. So over on this sector, we do have I think it's Take-Two, the other video game company. There's Activision Blizzard, and there's EA, and then there's the other one, so which tends to be the one that performs the best, hilariously. But we do have some earnings for Take-Two. Overall, pretty intriguing little area as well from a pullback perspective. So, we are just, a little bit closer to that pullback if we want it. We can't complain about getting the pullback, right? Who knows if we'll do anything with it? Who knows if it's a good idea or not? But we are definitely getting a nice pullback opportunity, it looks like, going into the early part of next week. So, again, you may or may not agree with what sectors I like. You may completely say, I'm not touching this. I'm just going to leave it alone. Good luck to you, bulls, playing into the pullback. But we have options, right? And we have to be willing to make those choices. We can't. I'm not going to go trade 17 different pullbacks on Monday morning, even though I have 17 pullbacks that probably look interesting on Monday morning. If we see a little bit of upward movement, at least, that's a key component. Let's see some upward movement. Let's actually see us break above today's high on Monday to show us a little bit more conviction from a buying perspective, because all week long we weren't able to do that. Every day it was making a lower high on the open, and so we never really got any positive. We never really got a chance to get positive momentum early. We were getting it later off of the intraday lows. As we kind of shift gears over to the VIX, I'm not a huge VIX fan, as you guys know, but we did dip down here a little bit today. But the thing that I thought was funny is, the VIX is down 16% today, and in my mind, I don't think volatility is 16% lower today than it was yesterday, at least market-wise speaking. But we did see a little bit of a dip over in the VIX here. Still a little higher than we've been. Still think the right approach to going into next week is to expect the volatility to continue for whatever that might mean to you or to me, because I think that's probably the right approach. Over in the dollar, did work our way into the 50 and use that as a little bit of a support catalyst, a little bit of upward movement. Still waiting on this one. Let's go peek at its weekly chart here. Not able to reclaim that break. That's my biggest concern. We still did close above the 9 weekly and the 50-day moving average. So I still think this is a wait and see. I still think that we're looking ultimately at bullish opportunities going into the days and weeks and to come, but I don't think it's here yet. I think we at the very least now need to reclaim that breakout point at 97.70 or thereabouts. I still believe, at least as it looks today, a little doji candle next week, I might feel a little different, but I think as it looks today, I still want to see it take out the top from last week and the body from the candle the previous week. Still on a wait and see approach. Don't really think there's any significant reasons to be looking at the dollar from a bearish perspective on anything other than intraday type of time frames. But I don't think it's done enough to get you excited either after that recent break. I would have liked to see a little bit more strength off of that break, but holding above that 9 weekly and this 50 daily, I think as long as those two things are happening, it's wise to be looking at it overall from a bullish point of view. And that's certainly how I will be approaching it. Just another weird day over in the metals market. Gold kind of working right back over to that 1290 area of resistance, kind of using that as its intraday top here again today. Again, I don't really think there's anything to see here from a swing trading perspective. But if we do break that, that would be a little bit of a bullish signal. We have reclaimed the 9. Now that's rising to the upside and we're above it. We're actually now, we've been above the 20 as well, but it hasn't quite flipped around yet. The problem is there's lots ahead of this, whether we're looking at it on a daily time frame or a weekly time frame. That trend line is there, of course, but we've got all these different moving averages sitting on top of it. On the other side of things, it's hard to really want to go bearish. This could easily just be a little bit of a support bounce. If we just zoom in and look at this, drop down, hit a low, up, drop down, hit a double bottom, up. If we break that resistance from this time frame, that's going to look a little bit like a W, right? Now, I don't think that's a good trading environment because of the factors that are on top of us, but I think it does, and again, I've been pretty off of gold for a bit, one way or the other. I think it makes it difficult to want to trade it to the bearish side of things, at least in the short term. So for me, still a leave alone from a swing trading point of view. Still believe that silver is the better thing to be looking at if I'm trying to directionally play the metals market. But quite honestly, as I've said many times, I'm not. It's just been too messy. Silver's been a little cleaner, I think, but gold has, but it's not been perfectly well behaved. Did see a little bit of buying, a little bit of a back and forth type of a day over here. Kind of a little gravestone type of candle at the end of the day. Really, we have a little bit of support here from a few weeks back, but really our next level of support is really going to be down here at this 1457, 55 range. Beyond that 1450, we do have some history there as well. I think on the resistance side of things, as long as we're below 15, not anything new and exciting to say about that. As long as we're below 15, not interested. Could talk about it once we get there. And lastly, or not lastly, over into natural gas, how could we forget crude? We did work right in. We tried to actually break that resistance on the intraday, closing right back down there. I think we just want to see how this one's going to open on this weekend. See if we get a gap to the upside. I mean, at the end of the day, if we would have held this, or if we see some upward movement early in the week, we've made higher lows and higher highs. Right now, it could easily gap the other way as well. So we'll just have to see how that, how it opens going into next week. I think a close above this, I think scares away some of the bears. I don't think it's enough from a bullish point of view, at least for a swing trade to try to work into it. I'll probably get a little more interested above the 50-day moving average if that's the way that it works out. Still, I really do believe this is still battling that long-term support zone. Not really anything new. But if we do take out resistance, you have to call it what it is. Higher low, that is a higher low. And if we take that out, and we failed today, so we could fail, next week, right? I think you have to call it what it is. That would be a positive signal from a bullish perspective. So we'll see where this one goes. Not really, still not a great swing trading environment. I still think the only real thing to do is wait and see. But that support level, we've talked a lot about it, no reason to overdo it, but I'm just not sold. And then lastly, over on crude, we did get the week that you probably wanted if you were looking at a pullback, a little bit of a deeper pullback here on crude. Spent the week going back and forth, still between that 50 and that 9 moving average. When we look at it on a weekly time frame, the only real complaint is I wish the doji was a little bit smaller, but I'm not going to complain too much. We can get a little bit of upward movement, either, probably from my point of view, at least either getting back above this 50 weekly, or at least, or whichever comes first, get this 9 working back for us. So ideally we get 1 or 2 more days and this 9 starts moving up. We get a close above that 9. I think that's where we can start thinking that, if I wanted this pullback, I might be interested. So I really like the way it ended this week. Let's see how we start next week. Some upward movement, break a little bit of resistance, reclaim some of those short-term moving averages. If nothing else, could be really interesting. When I look at this on an hourly time frame, kind of want to see what, at the very least, I want to see it reclaim back above that 200 hourly chart before I start getting too terribly excited about it. But honestly, I don't think we could have asked for a better week if we were looking for a pullback opportunity in crude, because if it just rallied super strong, it could have been difficult to get in. But with it consolidating a little bit back and forth, now ideally we have one more week like this, but I'm not even going to get that greedy. But the longer we're in here, the more we have a chance to kind of build that little momentum. So if and when we do break, have a little bit behind it. So I'll certainly be interested in crude as we get into the early part of next week. Not there yet, need a little bit of movement. At the very least, I want to see it reclaim that 9 EMA personally. But it definitely has my attention. So, ladies and gentlemen, that is where we find ourselves. We cannot say it was a boring week. We saw lots of movement, lots of great intraday opportunities, lots more volatility than we have been accustomed to seeing over the last little while. And that's not necessarily a bad thing. Volatility does present opportunity, whether it's a pullback opportunity, higher credits for our theta trades. And so we don't want to run from it, but at the same time, we want to be cautious. We want to be following those rules. Don't have to feel like I'm going to miss out on anything, right? I'm going to get my opportunities if I want them. I don't have to be the first one in, and very rarely will I be that guy. I found lots. I found about 100 stock watch lists that I've got for next week. A lot of stocks in a lot of areas. Aflac was a very interesting one, but even they really got running after I placed them into my list. But you've got pullbacks like on American Homes for Rent here. This is another one of those REITs here. And you betcha, Whitney, it's always a pleasure, my friend. Glad that you were able to join us. Some nice movement. So you're seeing some pretty decent things going on in the financial space. As you can kind of see, that's what we're kind of looking at right now. Citigroup, and not perfect, but CB here, Chubb Limited, just huge movement. So that you can see kind of the decent movement we had in the financial sector here today just by looking at a few of these stocks. But there are definitely some interesting financial trades or trade setups out there. AbbVie, really interesting one. They broke support on the intraday, but were able to reclaim it. But that's a lot of support level. So, potentially, if we break down below, that could be an interesting thing. Kind of a similar type of situation with RA here. I don't know much about this company, but so I'm finding some bearish plays too. And I always think this, but I really think at this week having some bullish and bearish trade setups for early next week is pretty important for us. So make sure that you get through your watch list, you get through those reports. We'll get them to you. You know the drill. But be prepared on both sides. I like PRGO, I threw it up on Twitter yesterday. They kind of broke out of this resistance zone on earnings, closed pretty nice yesterday. No upward movement here today, but I thought that was an interesting candidate. I was just kind of looking at it and thinking about, what it's got available. There's really not a lot of resistance until we kind of work into that 200-day moving average. So if I'm looking at something in healthcare, there's some things. X-ray, nice little break on X-ray here. Potentially kind of a high base break. So you're finding a little bit of everything. DHI was a deeper pullback. IR was a lot of these things really took off as the day progressed. So again, to reevaluate a few risk to rewards. But you can see there's lots of different opportunities out there. You can see how big this list is. It is crazy. A lot of interesting things in the in the discretionary. Nice little pullback on AirCap here. Boyd was actually kind of hanging around, at a support breakdown on the other side of things, but you have really decent looking potential breaks and things like Charter over on Comcast, Coach T's favorite company. So, nice movement off of that moving average. Dollar General, another type of a pullback, kind of hanging around at its 50-day moving average. Home Depot does have earnings, but I really like where they were sitting, so I just wanted to keep an eye on them. They got earnings next week, or 2 weeks from now. But hard to make a swing trade. Lots of things. Mickey D's, our old friend at Mickey D's, off of that recent pullback, actually held up really great throughout the course of this week, knocking on the door of that 200. That'll be the first time they've tested 200, and while it's just a number, it does tend to be a psychological number. A little bit of movement beyond that, I would interpret as there's some oomph left in a chart that looks like this. So, I mean, there are a lot of really interesting opportunities out there for us in the market in a lot of different areas. So we have we can be picky. We can we can focus in areas that we like. We can, look for bearish things in areas that we don't like. We can be picky on our risk to reward. There's going to be some really good opportunities for us as we move into next week. Let's just be ready for both sides, bull, bear, whatever it wants to throw at us. Let's just keep in mind that probably not going to see volatility just disappear on Monday. It might. I don't know the future any more than anybody here, but I always live by the idea that it's going to keep doing what it's been doing. So until that volatility dies, I'm going to assume that it's going to keep being around, which is not necessarily a bad thing. We just have to treat it a little bit different, right? That's all. So, ladies and gentlemen, that is going to do the market recap for the day and for the week. Like I said, Whitney, it did not put us to sleep. There is no two ways about that. It was an interesting week in the market. I think an overall a pretty fun week. Overall, passing, the first little part, first half, the second half was a lot more fun, I think, than maybe Monday and Tuesday. But a solid week in the market. We're getting better credits, which is something none of us are going to complain about, right? So we'll be ready to rock and roll here on Monday. Of course, if you are new around here, do be sure to subscribe to the channel and hit that notification bell. Join us over on Twitter. You can find me at Frank Martin23. You can find Tackle, of course, at Tackle Trading. Nothing crazy about that one right there. We'll get you those reports and the newsletter here tomorrow, so you're ready to rock and roll on Monday morning. Of course, spend a little bit of time having fun this weekend, doing stuff that you love with the people that you love. Ilka, you have a great rest of your trip, my friend. It looks like you're having fun. I'm jealous that you're out there in Vegas riding in helicopters, but I'm glad you're having a good time. We'll pick back up, same time, same place here on Monday afternoon. So follow those rules, be ready, be prepared. Don't be a reactionary trader, right? Go with the charts. The charts are probably the most to be trusted. So thank you very much, Whitney, and you as well, Patricia. You have a fantastic weekend. Everybody, you guys enjoy it. Have some fun. Be ready for Monday morning. We'll do it all over again here next week. So thanks, everybody. Get out of here. Have a fantastic weekend. I'll see you all on Monday. Bye, everybody.